Introduced in the year 1968 with the objective to mobilize small savings in the form of investment, the Public Provident Fund has since become India's most common and popular long-term investment pool, primarily because of three reasons. One, the sovereign guarantee on principal and interest earned. The returns are tax-free and the investments are qualified for Section 80C tax benefits. A public provident fund scheme thus is ideal for those investors or individuals with low risk appetite. From amount with as low as rupees 500, the individual can invest maximum of rupees 1.5 lakh towards his or her public provident fund account, which comes with a maturity period of 15 years. One of the benefits of having a PPF account is that the depositor can take a loan with minimum interest rate of only 1% per year. However, let me tell you that the person or the individual can avail this loan benefit only from 3rd to 6th year after opening the account. Talking about opening a PPF account as such, then let me tell you the rules governing a PPF account are quite stringent, and therefore it is important that you need to know what are these rules to take a full advantage or benefit of it. With that being said, in today's video, we'll look at how many accounts can one person hold and what happens in case a person exceeds that limit. Hi, I'm Namita Pandey. Welcome to IndianMoney.com. Let's get started. As a PPF account holder, you need to make sure that your account does not become irregular until the maturity period of 15 years. While the rules governing the PPF accounts are well defined by the government, there might be certain situations where certain irregularities might arise. And one such irregularity arises when a person holds more than one PPF account. Yes, as per the rules, a person is allowed to open only one PPF account in his or her name. While only one PPF account is allowed for a person to open, there might be certain situations or it is possible that a person ends up holding multiple PPF accounts. And this doesn't matter whether the person has opened the account in, say, post office or in a bank. A person is only allowed to open one account. Well, in case you have more than one PPF account, the second or the subsequent accounts will be treated as irregular and thus it will have to be closed. So, to deal with such a situation, the government has come up with certain rules and standard operating procedure to deal with the amalgamations of such accounts. So, when you have more than one PPF account with either of the operating agencies, here the operating agencies are post office and bank, then in order to regularize the rules, which is against the provisions of the PPF rules, the Department of Economic Affairs and Ministry of Finance then issues orders to amalgamate or merge the accounts in order to regularize the irregular accounts or deposits. So when you have made deposits in both the accounts, maybe you have more than two PPF accounts and the deposits you have made in each of the accounts falls within the limit of the deposit, which is rupees 1.5 lakh, then the accounts shall be merged and you then get the option to either retain one of the accounts and close the other account. On the other hand, in case you have made the deposit which exceeds the maximum limit of rupees 1.5 lakh, in such a case, the extra amount will be refunded to you without any interest. Let me tell you that in case you have more than one PPF account in one of the operating agencies, whether in post office or in bank, then it is easy for a bank or a post office to easily merge your accounts or amalgamate your accounts with a simple procedure of transferring the PPF account. Also, if there is any outstanding loan on either of the PPF accounts that are to be merged, then here the depositor or the investor will have to clear the entire loan amount along with the interest. That is, if there is any PPF loan account that are to be merged, it should be done, the loan should be cleared before the amalgamation or the merging of the account is done. Another last important point that you need to remember is that a person is allowed to open an PPF account in the name of a minor. This will be treated as a separate PPF account and not in the name of a person. However, if you are opening an PPF account in your own name, the second account will be treated as irregular and will be closed. So, this means that you are free to open an PPF account in the name of a minor child. Also, if you are someone who has just started investing in PPF or any other such government-backed scheme, then hurry up and download the Financial Freedom app and gain complete knowledge about these schemes and get your questions answered too. Also, don't forget to hit the like button, subscribe to the channel, and don't forget to hit the bell icon to get notified for our next video. Thank you for watching IndianMoney.com. Get wise and break free.